Hey there. Did you know that over 27 million Americans run businesses as sole proprietors? But here's the part no one talks about. In 2025, that choice could cost you everything. The IRS is cracking down harder than ever. Lawsuits are rising, and nearly 7 out of 10 small business owners are overpaying on taxes just because they picked the wrong structure. If you're freelancing, consulting, running an online store, or launching a side hustle, choosing between an LLC and sole proprietorship isn't just a paperwork decision anymore. It's a survival one. In this video, we're breaking down the real differences. No fluff, no legal jargon, just the truths you won't hear from accountants or YouTube gurus. Because the difference between these two can mean the difference between getting sued or sleeping easy, between overpaying the IRS or keeping thousands more in your pocket. And by the end, you'll know exactly which one protects your future, saves you money, and sets your business up to scale. Let's start with what most people get wrong right out of the gate. You start a side hustle. Maybe it's freelance writing, selling digital products, or doing some marketing work for local clients. You get paid, you send invoices, you file taxes at the end of the year as yourself. Congrats, you're now a sole proprietor. No forms, no fees. It just happens. And that's what makes it so dangerous. Because in the eyes of the law, you and your business are one and the same. That means if your business gets sued, you get sued. If your business goes into debt, that's your debt. But that's not what people tell you when you start out. You're told, keep it simple. You can always upgrade later. Or LLCs are only worth it once you're making serious money. But here's what they forget. Lawsuits don't wait for your income to go up. IRS mistakes don't wait until you hit 6 figures. Business problems don't care that you're just getting started. A freelance web designer took on a $2,000 client project. She used an online template for her design, something she assumed was royalty-free. 3 months later, she got a cease and desist letter. The client's business had been hit with a copyright claim, and now they were coming after her. But because she was a sole proprietor, they didn't sue her business. They sued her bank account, her car, her savings. She settled the case for $7,500 and nearly wiped out everything she had, all from a $2,000 gig. No one expects that to happen. But in 2025, more people are freelancing, contracting, and launching solo businesses than ever before. And that means more people are legally exposed than ever before. That's why this video exists. To help you stop guessing. To help you make a decision based on facts, not fear. And to break it all down in plain English so you can protect your income, your time, and your future. Up next, we'll break down the core difference between a sole proprietorship and an LLC, and why one gives you a legal wall, while the other leaves you completely exposed. Imagine this. You're standing in the middle of a field. No walls, no fences, just wide open space. Now imagine someone fires a lawsuit at you like a cannonball. There's nothing to stop it. That's what being a sole proprietor is like. No legal separation, no protection, nothing between you and risk. Now picture yourself inside a brick fortress. There are boundaries, rules. If something comes flying at your business, the walls take the hit, not you. That's what forming an LLC does. Let's be blunt. A sole proprietorship isn't a real business entity. It's just you, doing business under your own name. You and your business are legally the same person. You can get a business bank account, you can use a logo, you can even make a lot of money. But if someone wants to sue your business, they're suing you. Personally. That means your car, your house, your savings, your paycheck, all on the line. Now let's talk about an LLC, a limited liability company. An LLC is a legal entity. Once you form one, your business becomes its own person in the eyes of the law. It can open a bank account, sign contracts, get sued, pay taxes. But here's the key. If your business gets into trouble, your personal assets are off the table. Unless you commit fraud, commingle funds, or ignore corporate formalities, you're protected. It's called the corporate veil. And it's one of the most powerful shields you can have as a business owner. This isn't just theory. It plays out in court every day. An unhappy customer can sue your business for damages. If you're a sole prop, it hits you. If you're an LLC, they're suing the business, not your house, not your car, not your kid's college fund. A sole proprietor is driving down the highway with no insurance, no seatbelt, and no airbags. An LLC is driving with a reinforced steel frame, airbags, and a full coverage policy. Both are headed in the same direction, but only one is prepared when something goes wrong. You might think, well, I'm careful. I don't do risky stuff. But in today's world, risk doesn't need your permission. One bad client, one nasty refund dispute, one missed tax filing, one team member who says the wrong thing in an email. It's enough to land you in court, or at the very least, cost you thousands in legal fees. Most people think forming an LLC is expensive, or complicated, or only worth it once you're making six figures. But that's not true. In most states, forming an LLC costs under $300. That's less than what you'd pay to fix a broken iPhone screen. And the protection it gives you? It's like installing security cameras, a vault, and legal firewalls around your business. Would you risk your entire financial future to save a few $100? That's the gamble every sole proprietor takes, whether they realize it or not. Up next, we'll dive into the tax differences between these two structures. And this is where the real money talk begins. Let's talk about the part that makes people uncomfortable, but could save you thousands. Taxes. Most first-time business owners think, I'll just pay whatever's owed at the end of the year. It'll all work out. But what they don't realize is that your business structure determines how much of your profit you actually get to keep. If you're a sole proprietor, every dollar of profit your business earns is treated as personal income. So let's say your business earns $60,000 this year. You'll pay income tax on that amount based on your personal bracket. And then you'll also pay self-employment tax, currently 15.3%, because you're considered both the employer and employee. That means you're getting hit twice, once for income tax and once for being your own boss. You earn $60,000. You could owe over $12,000 in taxes before you even touch rent, groceries, or reinvestment. Now, let's say you formed an LLC. If you take no extra steps, it's taxed the same way as a sole proprietor, so you're still paying income tax and self-employment tax. But here's where the game changes. LLCs allow you to make a powerful election. You can ask the IRS to treat your LLC as an S corporation. With an S corp, you're required to pay yourself a reasonable salary, taxed like normal W-2 income. But the rest of your profit? You can take that as distributions, and those are not subject to self-employment tax. Let's say your business earns $100,000 in profit. As a sole proprietor, you pay self-employment tax on the whole amount. As an S corp, maybe you pay yourself $50,000 in salary. The other $50,000 you take as distributions, saving you 15.3% on that portion. That's $7,600 in savings, just from one form. And when you combine that with control over how you take income, building retirement plans, and accessing better benefits, you start moving like a real company. But it only works if your profit justifies the structure. S-Corp usually makes sense once you're earning $40,000 to $60,000 or more in net profit. Under that, it's probably not worth the compliance cost just yet. Bottom line, sole proprietors often pay more in taxes not because they're careless, but because no one showed them what's possible. Up next, we'll walk through exactly how to form an LLC in 2025, step by step. No lawyer needed, no fluff. If you've made it this far, you're probably thinking, okay, I get it. An LLC makes sense, but how do I actually set one up? Good news, it's easier than you think. First, choose your state. And unless you're doing business in multiple states or have a very specific legal reason, you should form your LLC in the state where you live. Don't overcomplicate it with Delaware or Wyoming just because someone on the internet said so. That move often backfires. Next, pick a name. Make sure it's unique in your state and doesn't infringe on any trademarks. You'll usually check availability on your Secretary of State's website. Your business name must end with LLC or Limited Liability Company. Then, file your articles of organization. That's the form that officially creates your LLC. It takes about 15 minutes, costs anywhere from $50 to $500, depending on your state, and can usually be done online. After that, get your EIN from the IRS. It's completely free. You'll need it to open a business bank account, file taxes, and hire contractors or employees. Don't pay someone to get it for you. It takes 5 minutes and costs nothing. Now comes a step most people skip. Create an operating agreement. Even if you're a single-member LLC, this document outlines how your business operates, how profits are distributed, and what happens if you add a partner or shut down. It's not filed with the state, but it protects you and shows you're treating your business like a real entity. Then, open a business bank account. This is a big one. If you don't keep your business and personal money separate, you can lose your liability protection. That's called piercing the corporate veil. Courts can say, if you don't act like a business, we won't treat you like one. And finally, once you're earning enough to justify it, you can file Form 2553 and elect S-Corp status. That gives you access to serious tax savings. But again, that step makes the most sense when you're hitting $50,000 or more in annual profit. Here's the truth. Most of this can be done in a single weekend. The hardest part isn't the paperwork. It's committing to build your business the right way. Coming up next, let's look at a few real examples. People just like you, and what happened when they picked the right structure, or didn't. Malik was a freelance marketing consultant. No office, no employees, just a laptop and some clients. He stayed a sole proprietor because he thought, it's just me. Nothing risky here. Then one client accused him of breaching a non-compete agreement. They sued, and not his business. They sued him. Malik ended up paying over $9,000 in legal fees and another $4,000 in a settlement. If he had formed an LLC, it could have stopped that mess from hitting his personal finances. Sarah was selling jewelry on Etsy. Her shop exploded. She was making over $40,000 a year, but she didn't form an LLC because she thought that was only for big-time sellers. One day, she got a legal notice claiming her designs copied someone else's. Whether it was true or not didn't matter. The legal threat was real. She panicked, pulled her store offline, and spent weeks trying to settle. With an LLC, her personal finances would have been shielded. She could have negotiated from a position of safety. Then there's Brian. He runs a small tech YouTube channel. Early on, he formed an LLC, even before he was making real money. Once he crossed 100 grand in annual income, he elected S-Corp status. Last year, he saved over $12,000 in self-employment tax alone. And because his finances were clean from day one, sponsors trusted him, his editor got paid legally, and he avoided a mountain of back-end headaches. So now let's talk about the 5 most common mistakes people make when choosing or forming a business structure. Mistake 1, waiting too long. People say, I'll form an LLC when I'm making real money. By then, they've overpaid in taxes, taken unnecessary risks, and lost leverage. Mistake 2, mixing personal and business money. Even if you have an LLC, this one mistake can kill your protection in court. Always use a separate business account. Mistake 3, assuming an LLC automatically saves you money. It doesn't until you take steps like S-Corp election and smart expense tracking. It's not magic, it's a tool. Mistake 4, missing paperwork, forgetting to get an EIN, missing deadlines to file your S-Corp election, not paying annual state fees. All of it adds up and could cost you your legal status. Mistake 5, paying way too much for services you don't need. You do not need to pay $1,000 to form an LLC. Most of this can be done yourself or with a basic filing service. So where do you go from here? If you're earning under $10,000 and still figuring out your business, you might stay sole prop a little longer, but keep your finances clean and plan your next step. If you're earning between $20,000 and $50,000 a year, you should strongly consider forming an LLC. The protection alone is worth it, and it positions you for tax strategies later. And if you're earning over $50,000 in profit, you're likely overpaying the IRS by thousands each year. Now is the time to form an LLC and elect S-Corp status. That's how you stop leaking money and start building wealth. You don't need to do this all today, but you do need to choose a direction. Because the longer you delay, the more vulnerable you are, and the more money you leave on the table. This is about protecting what you're building. Because the truth is, LLC versus sole proprietor, it's not just a question, it's a fork in the road. And now, you know which path leads to peace of mind, protection, and real growth. If this helped, leave a comment and tell me where you're at in your journey. And if you want more plain English breakdowns like this, hit subscribe. I've got you covered. Let's keep building smarter together.